Hello and welcome to Edison TV on a beautiful London morning with Mines and Money, resourcing tomorrow, I should call it, just around the corner. Now, we all know that one of the best ways in troubled times of protecting the value of your investments is gold, especially perhaps at a time when Bitcoin is buckling. And does that make gold the answer? Well, of course it makes gold the answer, and we know that that's why you're here. But not only is gold a way of preserving your money, but also it can be a way of growing your money. And one of the best ways to do that is to find a company which is going through that transition from explorer to producer. As everyone will tell you, that is where the big investment returns are to be made. Well, which companies are in exactly that position? Well, one I will tell you is Vancouver-listed Abcourt Mines, and its share price so far this year has doubled from roughly 5 to roughly 10 cents. To tell us all about it, I have in the studio with us the Président and Chef de la Direction, which to you and me is, I'll let you translate Président, but the Chef de la Direction is CEO, Chief Executive Officer of the company, Pascal Hamelin. Pascal, thank you very much indeed for joining us.
Thank you.
Thanks
for the invite.
Not at all. I hope the pronunciation was close enough. It was. Very good. You recognised it anyway.
Yeah.
So tell us, Abcourt, you're just going through this process.
Exactly.
Your mine is Sleeping Giant.
Yeah.
Give us the background to the story.
Yeah, so Sleeping Giant mine is a high-grade underground mine in northern Quebec, fully permitted, with all the infrastructure in place. It's a narrow vein, high grade. You know, the historical grade was 10.3 grams. That mine was in production from 1988 till 2014, on and off, you know, but throughout that period, Abcourt acquired it in 2016. We did geology, we did drilling, we did an economic evaluation in 2023. We continued the drilling, and this summer we got the final step. We got a credit agreement with Nebari to fund the startup of the mine, and we began production in July. Turn on the mill in August and start gold pour in September.
And did that take a little bit longer, that whole process, than you had originally hoped?
Well, you always want to go quicker, but at the end, it's the lender that decide the rate when you're going to start the mine, you know. So we did a lot of drilling. We de-risked the project to a level where the lender is comfortable to embark on a journey with us. So that occurred this summer. So now we're ramping up production. We're doing hiring of miners. It's conventional mining. So it's you need a lot of miners in that type of mining environment. So we're doing the hiring. We're around 110 employees at this stage. Our goal is to go to 130 by this spring.
So we are December now, and you're in production by June next year. So you've got 7 months in which to ramp up. What do you need to do in that period? What are the milestones that we're looking for?
Hiring people. That's it.
Yep. So all you need. It's a well-known mining camp, so labour is freely available.
Yeah. We got a lot of resume for young miners. So it's to go through the training. So actually 2 trainers start today at the mine. So they're going to train young miners to become veteran.
And then tell us a little bit about the actual mining process.
It's underground mine. So we have a shaft.
Fully operational.
Yeah, fully operational. The mine always been dewatered. The mine was never flooded, so the dewatering system's always been in place. The shaft was well kept, so we're doing upkeep. You know, it's ongoing. It's a mine, so you always have to maintain your asset. So we did that from 2016 till today. Now we're increasing the labor force to do the development underground to access the stopes. The stopes there's 2 mining methods. When it's subvertical, we're going to use long hole mining. So sublevels every 15 meters. and then we're going to do 2.5-inch long hole drilling to drill and blast panels. So that's the long hole mining methods. Once we start mining those stopes, that's when you're going to see a big bump on the number of ounces per month, because these stopes are providing a lot of tonnage. Right now, what we're doing is the development of these sublevels. That's what we're doing right now. We have one stope we're doing sublevel development, and 2 other stopes we're doing the vertical raise through with we call them halomac. So we're doing the vertical raise on 2 of these stopes. So, and the last stopes, that one is in production. It's a room and pillar stope. So when the inclination of the vein is more horizontal, in this case, I call it a double diamond, like a scale, because it's around 30 degrees.
Oh, so it's quite steep.
Oh yeah, it's pretty steep, but high grade, very high grade.
Go on, tell us how high.
Well,
Order of magnitudes.
yeah, the channel sampling, we capped them, So some channels were 300 grams per ton.
Right.
That's undiluted, the channel, the vein itself.
Yeah.
So the vein was 30 centimeters, 300 grams. So by the time you dilute it to 2.4 meters, we saw a head grade at the mill over 15 grams. At the mill on some days. Like I'm not saying this is the whole grade, but we see spikes on some days. So it's very promising, that stope, and we're going to be mining that stope until next summer.
So you've got these 2 methods. You've got the room and pillar, which is high grade stuff, and then you've got the long hole stoping, which is a lower grade. It's more a volume exercise. It's more an exercise in tonnage. You blend those, presumably, up to the surface. What sort of rates can you haul up to the surface at? What sort of rates can you expect in terms of plant throughput?
On the in the PEA, the plan was to go to 350 tons a day. So it's lots of capacity in the mill and lots of capacity in the shaft. The 350 tons a day, the bottleneck or the constraint is the number of mining fronts. Because you're doing development, stope preparation, logistical, going from drilling to blasting. So the average on a mining front is like 75 to 100 tons per day maximum. So you need, in order to maximize the mill at 800 tons a day, you would need 8 mining fronts. So for that, the geologists need to take a big lead in front of the operation, and that's what we're building. So 350 tons a day now, that's the goal. So between now and commercial production, commercial production will be when we generate profit. Okay, so that will be a lot sooner. But the steady state, 10,000 tons a day or 350 tons per day.
10,000 tons a month.
10,000 tons a month, sorry, not 10,000 tons a day, geez.
we can dream.
But 350 tons a day, we're going to get that probably in the fall, like around the same time next year.
Right, okay.
But you don't need 350 tons a day to be commercial production. Commercial production is at a profit. And with these margins that we get these days on the gold sector, I don't need to be at 350 tons a day to generate profit.
So just to distinguish between steady state, which is going to be roughly this time next year, and commercial production, which is going to be in the second quarter, so May, June sort of time. What about actual first gold?
What
about first gold?
Oh, the first goal is it's going to be commercial production. So like
so the two are going to coincide.
So around 150, 200 tons a day. So when we reach 6,000 tons a month, we'll be roughly over 1,000 ounces per month. That's when we're going to get commercial production.
Okay. So the two are going to be roughly coincident. So first gold is going to be roughly the same time as commercial production.
We're pouring gold right now. Okay, so we're ramping up. October we produced 475 ounces. So it's going to be a ramp. On a quarterly basis, people will see a ramp up on our production results. And, and then they're going to see the financials too. When they see December 31st and March 31st, the financials, they're going to say, oh, okay, they're on the path. They're on the path of commercial production. And then, so the investors, right now the share price is 10 cents. People are seeing that we're in development. At 5 cents, we were an exploration play. Now we're in development, 100 million market cap. I don't think we'll be there when we're in production and generating big margin to achieve our plan, and also to increase the life of mine at Sleeping Giant. With that margin, the cash generated from the assets, it's going to be to increase the life of mine at Sleeping Giant and also grow the company, like start a second mine.
We should maybe just go back a little bit here, because we haven't done much background on the mine. You're in the Abititi region of Canada, very well-known mining region. The mine used to be owned by Horizon, and then Horizon, and then Cambior. What is the mine that is in this sort of whole mining camp? What is the mine that exists now that is most like Sleeping Giant? Or sometimes it goes by its French name, doesn't it? Geant Dormant. Say,
the Sleeping Giant, Geant Dormant, is similar to Dumagami mine that Agnico had in the 80s.
Right.
If we recall, Agnico Eagle, before LaRonde, they were mining the Dumagami mine. It was a sulfide ore, narrow vein, low tonnage. And then Agnico discovered LaRonde Deep, and that was a game changer for them. They had a lot of sphalerite zinc associated with their gold back then. I recall in the late 90s, their cash cost was negative $200 because the zinc was paying for everything.
Right.
So LaRonde, Dumagami mine was probably a cousin of the Sleeping Giant. I'm not saying we're going to find LaRonde at depth at Sleeping Giant, but
probably worth a quick look, though. Probably worth a look.
We will. We will look. Trust me. But those are it's pretty well the only mine in like the rest of the camp is mechanized mining. If you look at Lamaque, West Dome Kena, IM Gold, Westwood, and LaRonde, Goldex, they're all mechanized mining. They're mining veins that are a lot wider. Not quite as like the base metal mines, like in Sweden or in Ontario, but wider than the Sleeping Giant. Sleeping Giant, it's a 1 meter vein, and the rock on either side is barren. There's very, very little. It goes from 100 grams per ton to zero.
Easy to distinguish? Can you visually distinguish between?
Oh, yes. There's our vein is there's a lot of sulfide in the vein, so you see the calco, the pyrite, the sphalerite. Actually, there's no visible gold at Sleeping Giant. Very, very it's buy a lottery ticket if you find visible gold.
Right.
Because it's very rare.
Right. Okay.
But the gold is disseminated throughout the vein, and there's a direct link with the sphalerite content. So more sphalerite when you look at the vein, you can see, that's going to kick. It's going to be high grade.
You mentioned you'd done a PEA.
Yeah.
And what were the results of that? What did it show in terms of the NPV, the IRR?
Yeah. It was done at $1,800 US, so it's totally different.
Yeah, sure.
But back then it was like, if I recall, it was like 60 million US NPV at 1,800. So today it's like
4,000. Say it might be.
Oh yeah. That's forward-looking statement.
Yeah. All right.
But it would be probably well north of 100 million.
Yeah. Okay. So much bigger sorts of figures that we're looking at. And then you didn't do a pre-feasibility study?
No, we're going to have to. No, because there's the difference between a PEA and a pre-feas would have been you take out the inferred resource from the life of mine. And narrow vein gold mining, if you want to do a pre-feasibility, following 43101 protocol, you would have to drill for like 5-10 years to have indicated resource. And you don't need to do that because the payback today is so quick that you can have a mine plan with 1 year of indicated resource and you pay off your initial capex. So it would look, if I did a pre-feas, it would have just indicated resource. It would be a 2-year life of mine with a 1 year payback. It would look odd.
Yeah.
So there's no value to that. So when the lender and us would discuss, the goal was, let's make sure that we always mine indicated resource. So it's well defined. So the definition drilling is ahead of the mining. And then everybody's fine. Like we're predicting, you're able to forecast your revenue, your ounces, and then you got a solid plan, and then you're able to sustain your capex investment. So that's what we did. Right now we're drilling this Q2 2027. That's what we're drilling right now. So 2026 is defined. The mine plan is set. I'm actually I have engineers right now working on the LUM for the longer term, 7-year life. Of course, there is inferred resource in that, but it's better to start mining now and generate cash and use that cash to do the definition drilling for 2028, 2029. So that's what we're doing.
So the life of the mine, according to the PEA, was what?
7 years.
7 years.
Yeah.
Okay. And as you say, that was a lower gold price. The gold price affects the life of the mine potentially.
Exactly.
Are you allowed to give us an estimate about what the life might be with at these high gold prices?
Let me
ask you in another way.
Yeah.
What would you like, and you're allowed to exercise some
10 years.
Yeah, okay.
10 years.
10 years. But what would you like the company Abcourt to look like in, say, 3 years' time?
3 years' time, Sleeping Giant is producing steady state, predictable, 10-year life. Like we show the market that we have 10 years of life of mine, probably an updated PEA that show the market 10-year life, with inferred resource in the life of mine, so a PEA, and then have the second mine be about to produce. That's my goal for 3 years.
Okay, so if you have a second mine that's about to produce, you must have an idea of what that mine is.
Yeah, and I think the market knows too.
Okay. Tell us about it nonetheless.
Yeah. So we're drilling. We had a discovery in 2024. It's the Cartwright zone of the Flodden property. It's a property, crow flight. It's about 90 kilometers from the Sleeping Giant mill. It's due east from the Sleeping Giant by gravel road. It's 138 kilometers. Now Flodden Cartwright zone. It's a surface showing. What we exposed so far is 300 meter long, 15 to 20 meter wide, subvertical. We drilled 4,000 meter this winter on that underneath that zone, and we validated that the zone is just not on surface. It didn't come from the sky; it came from under. So we drilled, and then all the holes hit. I think we drilled 8-10 holes. I forgot. Anyway, like 100% of the holes intercepted the zone. So similar width, a lot of amplitude. So right now what we got is 300 meter long, 15 to 20 meter wide, at least 200 meter deep. So that's what we got. On surface, it was the average of all these channels. We channel sample every 15 meters, and the average grade was 5 grams on surface.
Very nice indeed. Competent host rock, so you can put in a reasonably steep pit, or is it?
It's too early to say. It's the green belt, the belt in Quebec. It's pretty competent, the rock. So I would say it would be a pretty steep pit. But first, let's define the zone. So this winter we're starting to drill mid-January. We're starting a 20,000 meter drill campaign right on that zone. We're going to start east of that surface showing we're going to drill east because it's more wetland, so it's perfect for winter drilling. And then next spring and in the summer and the fall, we're going to drill on the west side of that showing where it's on the ridge, so it's dry land, it's easy to drill.
And then is this a standalone operation, or is this, can you process this through
It will depend. It will depend. If it's a low tonnage,
Yeah.
we're going to process it at Sleeping Giant. If it's a high tonnage, we were 1 kilometer off the railroad, the national grid. So so you could do DSO, direct ore shipping, you know, to a process plant, like you know, might not be ours, but you could do that, or you build a mill on site and you make dories.
We haven't actually talked much about the processing. We haven't talked about the processing at Sleeping Giant either.
Yeah.
Could you describe the process? Relatively conventional?
Yeah, it's typical for Canada. We use we have a grinding circuit that grinds the rock to 75 microns, and then we use cyanide to leach the to put the gold in solution, and then we recover the gold from the pulp with carbon, so carbon and pulp, and then we make dories at the site. Currently, it's a 2-to-1 silver to gold, so actually we get a good benefit from the byproduct of the silver sale. Right now, the silver is at a record price. So for every ounce of gold we produce right now that we pour 2 ounces of silver.
Yeah.
So it makes the dory looks, it's more of a whitish dory. It's not a yellow gold, you know. But
we know it becomes yellow.
Yeah, it comes together. So what we do then is we have a contract with the Royal Canadian Mint. So we ship the dory to the mint, and then we sell it to the market spot. No hedging, no. We sell spot. We have no. You know, we didn't pre-sell gold or none of that. So
no streaming or
no streaming. We have a 2% royalty with triple flag. No, not sorry, 1.5 because we bought back 0.5% in September. But we had 2%. Now it's 1.5 with triple flag, and that we have the option to buy back another 0.5% before 2027. So we'll probably exercise it between us.
And I suppose you know that silver you were talking about. If you do need, now you don't need capital at the moment, but if you ever did need capital, perhaps you could stream off the silver.
We could, yeah. I receive offer, but so far, you know, I think we're gonna get that. So we're gonna keep the silver for our shareholders.
Pascal, thank you very much indeed. We wish you all the best. And
Thank you.
Look forward to talking to you in the future. Ladies and gentlemen, that was Pascal Hamelin, the Président et Chef de la Direction, CEO to you and me, of Abcourt Mines. Keep an eye on them. The shares have already doubled so far this year, and going into production, we know that's where the big investment returns are to be made. We'll be bringing you more such investment opportunities very near in the future. We hope, we're sure in fact. But until then, you have a capital day.